Hello, mic test, mic test.
Hello, mic test, mic test.
So hello guys and welcome to the 135th, sorry, 135th edition of our Trading Opportunities webinar. This is Nirav coming to you live with our weekly market update series called Trading Opportunities. In the previous webinars conducted so far, we have captured 336 trades, and let me start the drawing thing here before we proceed with this session. Yes. So I was mentioning previously in the 133 webinars, we have captured a total of 336 trades. Right. What setups were discussed in the last webinar, we will discuss today when we start our 135th edition. The way we'll proceed is we'll just check the recording from the past webinar section by section, and then check the live chart and see what has changed, what's the new analysis, or if it's following the same analysis, then are there any specific new levels of interest. Right. For those of you joining in for the first time, we conduct these webinars every Friday, and the timing is always either 2 p.m. GMT or 7:30 p.m. IST. So in case you want to join in live and be a part of this during live markets, these are the timings. A little bit more about my work. You can check my book, Think with the Markets, on Amazon's Kindle, that is electronic delivery platform, right? And you can also check my past track record of 6 years plus consecutive accuracy of 80% plus, which is higher than above or above all industry standards, by visiting this link on the top left. And these spreadsheets generally do take a little bit of time to come on screen. Yeah, there it is. So we have a compilation of the date, instrument name, right? What was the analysis at that point in time, the link to the videos or the live webinars, and what was the outcome, right? So same is the situation with the every year where we have compiled things. And after these monthly series, we started doing these weekly webinars, which we are currently conducting 135th of. Right. So that's about it for our quick take on the introduction part. You can of course check all that. And lastly, here's the sequence. We'll start with crude oil, followed by gold, S&P, Nifty, and eventually discuss the last chart of Bitcoin. Right. If you guys have any doubts or questions regarding the discussions, you can just post them in the live chat as the webinar runs. And I would say that's about it for the quick introduction. Let's now head over to our chart. First of all, instead of the chart, let's open the last recording and check what was being said on the Euro chart in the last webinar. So here is the last webinar's recording. Let's very quickly check Euro analysis for the sake of record keeping. And obviously, I'll have to turn the quality to 1080p. And by the way, in the audience, if you are able to hear me and see the screen share nicely, just let me know in the live chat. Right. At mine, it seems to be fine at least. So here's the chart of Euro. Let's see 134th webinar. Let's see what was being said. Yeah, there it is. So the idea was that we are possibly seeing a continuation for wave 2 of the impulsive formation, and once the wave C of the 2 is complete, we will possibly look for an upward movement in this market. That was the main theme here. And now let's see what the actual chart has for us. Here's the actual chart, and while count-wise things are seemingly going as we expected them to, overall I have closed my long positions in loss on this counter. The reason being that very simply, if this was the wave 1, we were expecting wave 2 to not go below this level of 1.10057. So below this level of 1 point, roughly speaking 1.100, we are seeing possibilities of this market taking a downward trajectory instead of upside, right? Specifically, if I squeeze this chart in, and what about the other guys? Am I not seeing them, or are they just not there? No confirmation today, and no usual subscribers leaving their comments. Say hi at least if you guys are there. Chill Music, can you advise on silver? I'm short. Sorry, I'm not giving any trading advices, and also I don't trade silver myself, so won't comment on it. Anyways, getting back to our discussion, what I'm seeing here is the possibility that we may have completed a corrective WXY in this market. So this is a point of reference, and I'm discussing right now a alternate count which we have been following for quite some time, right? And in this case, we see that the possibility of this market going up, downward correction, and then up again is what you call a WXY correction. Now, again, I'm not saying this is the most perfect analysis and the Y is complete here, which is which will basically suggest downside movement. But that possibility does hold true, and if that possibility does hold true, any longs held will just accumulate losses more and more. So at this point, in conclusion, what we can say is that either the WXY is complete and this market can head lower from here, or this WXY can transform into a triple zigzag formation, or perhaps the X is a bit complex structure. Perhaps the wave X is still continuing like this sideways movement, and once this X is complete, this market will take off again. So given the fact that the downside possibility is existing at this point in time, I have taken out my longs in loss and will only consider re-entry if I see some good strength in this market. Specifically, breakout wise, if the market takes out this last level around 1.119, then we are seeing some strength on this counter, right? And above that level, we can consider long trades, right? That's what we can think of above 1.12, right? As far as the second possibility is considered, the market just heading lower. Let me represent that with the yellow, right? So that possibility also exists, but we do not have any confirmation for that. So for that, it's basically a wait and watch market. Only for longs, we have a trade setup so far, and for shorts, it's a wait and watch. We do have a setup on breakdown, but the entry is way too low, below 1.60, 1.06, and that's just too low. I don't think that is something we can call an entry of any sort. So it's a market to stay out of for the time being. I've discussed the overall high time frame idea on this, and let's see how it progresses in the coming sessions. That being said, let's now head over to our next chart, CL, and see how things have progressed there. So here's a chart of crude oil. We had two outlooks discussed. First, H1 was suggesting upward movement, H2 was suggesting downward movement. And we specifically had upside triggered above 72.34, as you can see written over here in extremely clear words, right? So that being said, you can check the whole analysis. We are at this point not interested in discussing the whole thing. You can just check the whole thing by visiting the YouTube channel and clicking on live and then selecting 134 webinar. So basically 72.34, if it's taken out, we look for long consideration. That was the main theme in our last webinar. Now let's see how much of that has come to be true, if any at all. And here we have the live chart on crude oil. There it is, your 72.3 level. Let me just confirm the exact level. 72.34. So 72.34 is somewhere here, right? As you can see, this market has taken it out and then just flown from here to the upside. I was able to capture scalp longs on this counter, which were quite good, specifically in this area. In this area, I was able to capture some scalp longs, and they gave a nice return, actually more than what we were making on the monthly or what we had made in this month. All of that was also posted live in our Slack. But yes, coming back to our analysis now, the main idea we have is this is our point of reference. And from here, we have the basic idea that at least we are seeing an A down, A up, B down, and C up kind of correction. So basically, what we call in Elliott Wave terminology is as a zigzag correction. You can label it as an A, B, and C. So here it is A, B, and C. And within the C, the thing is that we are in Elliott wave correction. So that basically means C wave will have 5 waves inside of it. That basically means it can either be an impulse or a diagonal continuation. In this particular case, I'm looking at it as an impulse, right? Specifically, if we count the internals. So this is the starting point for wave C. We have the wave 1 up, 2 down, and 3 up, complete, most likely complete here. We don't have the confirmation yet, but it looks most likely complete here. So as we already know, impulse has 5 waves inside of it, and if the third one is complete, then we will have one more up leg remaining. So currently we are over here, third complete. So once this correction, which will be represented by this sideways leg over here, is complete, we can then say that another leg up will come into play, right? So we are just waiting for that another leg up. So I would not say we are waiting for the leg up. What I would say is that we are waiting for this wave 4 to show some sideways to bearish movement here. It can take support right around 74.6, or it can take support around 73.85. So whichever levels this market takes support around, what we are going to do is we are going to wait for a reversal, and safest bet will be to look for breakout longs. But I think in this case we can just start building up longs, and once the longs are there, we can add more and more as we see more confirmation. For instance, in this case, if we do see that the market is taking support around the level of let's say 73.85, we can enter partial longs here, let's say 1 or 2 lots, and as the market goes up, we keep adding one here, and at the breakout we can add a massive position as well. So that basically comes down to position sizing, and as I just said, that depends on your own analysis on shorter time frames. Right. So that's about it for our discussion on WTI's crude oil. We have discussed the important support levels, and the major idea or the basic theme remains bullishness unless we see market sustaining below this 73.85 level. Then that means something else might be going on if the market does not sustain above it. So that's the level to watch out, and the strategy is very simple as we just discussed. If you guys have no doubts in this discussion, then we'll just move over to the chart of gold, which is one chart which just keeps giving us more and more profits. One second, let me just do this. So let's head over to the recording for the last webinar and see what was being said on the chart of gold. So here we are, and currently seeing the recording on the chart of gold from our 134th webinar. Looks like we are counting some sort of impulse, and basically I see the possibility of one more leg up. Let me see if there is something else being discussed here. Let's increase the speed. The price at that point in time is 2649 roughly, and the idea is that we are going to see a corrective leg for Roman 4 and then Roman 5, which will complete the dot 3. Yes, so that was the main theme. Let's see now how far away or near we are with that from that analysis. From 2649, which was discussed on 27th last month. So we must be somewhere here, I guess. So from that point in time, the market has gone lower for the wave fourth, which was expected progression that the market can go lower for the wave four. We also have levels marked here. Specifically, looks like the market is taking support at the already marked level around 2626, right? Now, that's all well and good, and so far it has held. But I personally feel that this market is not precisely doing the simplest thing, and for that reason, we will now look at the newer count or updated view. So, in the updated view, what we are going to do is first of all extend the support levels a little bit in time. So, first of all, we have two supports for this market. One is coming around 2626. Here, the market has already tested the support once. And second is coming around 2599, or let's just call it 2600, in which case we still have not seen any movement there since the correction began. So now once we remove everything, what we can see here is the first leg here, correction possibly completing, not completing, I was continuing as a possibly even complex in this case is possible. So wave B somewhere there and C here is remaining. So long story short is we expect that this market can still continue for one more leg before it goes up for the fifth wave of the impulse which we were expecting previously. At the same time, there's the second possibility that the B and C are not going to be taking place and the wave 4 is already complete here, in which case the market can just fly from here, right? So with that being in mind, we from a swing perspective think that either we have H1 suggesting down and then up, or H2 suggesting straight up. So basically, long story short, swing perspective we can hold. If not, then not. In this particular case, I already have some longs remaining from our long standing positions in this counter. Almost 90% of the position has been booked, but the remaining 10% we are still holding. As you can see here, wave 4 possible continuation with strict loss stop loss at 2621. So we still have this long position in hand, and the market has remained above 2621, and possibly I will have to at least reduce the stop loss, or what I can do is take out the position if the market goes below 2627 and then re-enter later, because this is a free trade right now. We were holding it from substantially lower levels, and hence it's a free trade. Even if the stop loss is hit, we will still get out in profits. So these are the two takes on gold, and we have discussed the possible support levels and upside resistance level. I would say incoming resistance immediately is at 2700. So that clears the picture a little bit. I don't think there is much to discuss here from this 15 minutes chart. And if you have any doubts, you can just post them in the live chat. Otherwise, we will now move over to our chart of S&P. What about our usual audience? Is nobody live here with us today? I don't see much of activity in live chat. Audio is going there. So at least I'm not talking to myself. Anyways, so with that being said, before heading over to our next chart of S&P, first of all, I like to mention that these webinars, I've been doing them for many years now, take a lot of time and energy, and I have to share my expert opinion with you guys completely for free. So I would appreciate it very much if you guys were to take a little bit time and share this content with your friends, colleagues, and other people who are into trading and would benefit from our content. Because, as a matter of fact, we have captured more than 336 trades so far in these free webinars, and it's all for free. Everything is in front of you guys. I'm not hiding anything or putting things behind a paywall. It's all quality content. Generally, content that like this is not given out for free. So again, my request, kindly share the content and do your part so that YouTube algorithm picks up the content and we reach the right audience as soon as possible. Right. One second. With that being said, let's now head over to our next chart of S&P's 500. So here is the recording from our last webinar. Let's remove everything from screen. Let's see what's being said on this chart. So first of all, we were holding a bullish view on this counter. Let me see if there was another possibility to discuss. I personally think we were quite bullish. Yes, we were thinking that we were in the Roman wave 3 of dot 3 of 3, right? So basically, I was also holding longs on this counter, which later on hit our stop loss and I had to close them. They were automatically closed. I didn't have to close them actually. Hello, Sandeepan. Nice to see you here in the live chat. And as I was mentioning, there were longs we were holding, and this one did not really work out as we expected it to. So that brings us to the question: what is really happening here? And let's see that now with the S&P chart live on screen. First of all, a few things I've changed here is from this point of reference around the price level of 53.89. What I've done is I'm counting this structure to the upside as an impulse up with this as being the 5 legs. Right. So we are counting this whole thing up, and this will make this a wave one. Let's call it a circle degree wave one, and this will make it a wave two. Let's call that a circle degree wave two. Right. Again, I'm not saying we have a confirmation for wave two, but this is just a hypothesis. Well, good morning to you, Luis. Finally, nice to see you here in the live chat as well. So now the possibilities become a little bit more clear. If the circle 2 is complete, then we can see upward movement. Let's call that as our H2. And higher probability count will be that this market is still having one leg down remaining before the next leg up comes into play. So H1 in the upward direction after a down move, of course. So our main hypothesis is suggesting that one leg down, then a leg up, and secondary hypothesis is suggesting straight off upward movement. So basically, I'm not holding any longs on this counter after our last position was closed, and I will look to consider something. But let's see the important levels where I should be doing that. First level is where the market has already taken some support at the price level around 5692. Second level is around 5636. So let's remove everything. So basically, if the market takes support around 5636, then I can look to build up some longs from this counter. Second strategy would be to not do anything and let the market take out the last high, which is around 5779. But overall, as I said, I don't have any position on this counter. The reason being, if this is a circle one, then circle two is not really required to just stop here at 5636. It can go to much lower levels, including the price level between 55902 to 5540. And as a matter of fact, it can go to even lower levels and test even 5416 level, this level. So with that in mind, the downside possibilities or a deeper correction possibility is still there. It cannot be ignored yet. And for that reason alone, I'm not interested in taking straight out longs on this counter. Maybe I'll take some scalp shorts, maybe some scalp longs, but no huge or no swing kind of positions as of yet, right? So wait and watch market. We have discussed the support levels, and breakout market. So we have discussed, no, we haven't discussed the upside targets coming around 58.11 and then 5900. So not very relevant at this point, but that's the analysis. If you guys have any doubts or questions, you can let me know in the live chat. Hello, Dharmesh. Nice to see you in the live chat. Right. So with that being said, let's now head over to our next chart of Nifty 50, which will be followed by the chart of Bitcoin. Here, let's see what was being said on the chart of Nifty. It was quite similar to the S&P count. We were drawing correlations from these things, and the idea was that we were looking for long plays. Let me just play this video to see if there was something in specific. Let's just speed it up. Right, so looks like we were counting it as an impulse with the fifth circle degree. Yellow color is still remaining, and that basically means it did not really play out very well, or did it? Let me check. We just wanted to establish idea. Yes, so that was the idea. 26 120 should hold. So now we have the main point in mind. Let's now head over to our actual chart. So 27th September is here, and the market has just gone lower from that level. So 26 120 would be, let's see where it is. Yeah, 26 120. Yeah, there it is. 26 120 was the level we wanted to see held, and fun fact here, it is precisely the level where the market tested after opening gap down at 26059, right? So in a way, market did respect that level, right? And what can I say, man? It didn't follow our more bullish scenario, but overall it did respect that level and went down in a bearish bias. Let me take the comments. Hello, Jill. Nice to see you back again in our live webinar. I don't cover that, Dharmesh. No point in asking in every webinar. Someone else says, kindly launch a service for recommending for stock swing trading. I'm never going to launch a service with just tips, but I do have a stocks section in our Slack where I post my own live trades, and we have captured a fair amount of decent amount of trade, including the Sun Pharma position and Bajaj Auto longs, which we got in at around 9800 and it went to 12,800. So if you're looking for a tips provider service, just look elsewhere. I'm never gonna do it. Those people never make anything and are just mostly wasting their time and money. But if you're interested in my own live analysis and live trade updates, it's already there, right? So here's Conrad with the comment, managed to enter around 2626. No, says I booked significant profit so far and I still have some long trades open. Well, that's nice to know, Conrad. And thank you very much for letting our live audience know about your experience. I think you are a little bit late to the webinar. We have already discussed gold. I still have my longs on with the current stop around 2621. But it needs to be noted here that I am looking to, or I'm most likely going to adjust my stop loss on this counter. Either I will book the profits on the existing longs around 2630 level, right? Or I can just close it right away as well, right? Because if the market continues lower for wave C, the incoming support is at 2599. So we will lose 20 plus points here if we allow that this big of a movement to the downside. So keep that in mind and basis of your entry accordingly manage your stop losses and exit strategy. Well, with that being said, let's now head back to our Nifty analysis. Now that you're welcome. Wait, I don't know what your name is. Yes. So as I was saying, Nifty things have changed a little bit, but actually I was already covering it. I just never discussed it as a main theme because I did not think like it was going to have a significant impact. So now let me show you what I really mean. So if you look at the last few weeks of webinars, last week, last to last week, or the week before that, you would know that we had this orange count in play as well, always 1, 2, 3, 4, and 5. However, I never took it seriously. It was always the kind of count which was less probable or less likely. And the fun fact is that it is the very count which seems to be holding right now. Right. So let me remove everything and show you what I mean. So if we consider this leg as a 1 and a 2 and 3 and a 4 and a 5, then we can say that an impulse is now complete. Right. Now this is not the most bullish count. As a matter of fact, it is quite a weak count. But the fact remains we already had it and the market seemingly is following it because it's the most suitable count at this point. There are other factors I have looked at which I will not discuss publicly because there's a certain amount of knowledge that just can't be shared in these free webinars. But as I'm stating, if this is the count which is playing out, that's an issue because then the corrective structure. Let me remove everything. Can follow this downward trend and take this market to the levels of 24,386 and perhaps even lower. Right, 24,386 and perhaps even lower. That basically means this market can go and touch 23,826 as well. And I mean, there are lower levels possible, but this is the important support region. So that basically means no long on Nifty as an index. Of course, there are sectors and stocks which are outperforming this whole downward scenario and are quite tradable. But from a index perspective, there is no longs because we have deeper retracements which are possible. So high, highly cautious activity if you are looking for longs. Maybe swing, no, not swing. I mean maybe short term intraday actually, not even swing is possible, but otherwise just avoid this thing, right? So that's about it for Nifty. I would say wait and watch until we see some support forming around the marked levels. If we do see it, then we can look for what do you call short term or systematic short entry and then build the position from there on forwards, right? That will be it for our quick take on the chart of Nifty 50. Well, Dharmesh, DLF is something I am actually analyzing, although I've never discussed stocks for quite some time. Let me see if there is something significant in DLF which I can show here. So for a change, let's have a look at a stock, specifically the stock of DLF. So here we have the stock of DLF here, and currently my outlook is that I'm looking at it from a bullish perspective, thinking that this market is currently in a wave 4 correction, and as soon as this correction is over, we are bound to have one more up leg remaining. Now the thing is the downside support level is for this counter coming at 727, right? If the market sustains below this level, then there is a possibility that it can just go lower and this analysis fails. And if it holds it, then we are more than happy to continue building longs. So that's the generic or overall view which I can provide publicly. Of course, there are other points on this counter, but I think it's suffice to say that's the limit of the discussion we can do in these webinars. So that's my quick take on DLF. Right, there are upside targets, etc. But of course, let's see more participation and more requests in the upcoming webinar, and we'll look to cover it. Well, with that being said, we are now down to our last chart of Bitcoin. If you have so far been in the webinar and enjoyed the content shared so far, I would very much request that you guys kindly share this webinar's link once it's complete with your friends, colleagues, and whoever else would be interested in content like this. Right? Keep in mind, guys, that if you want to see more of this quality content, you have to do your part and bring more audience and bring our attention to the right audience specifically. Well, with that being said, let's check our last chart of BTC. You're very welcome, phone Ativat. Well, let's see BTC, what's happening here. Kindly share features of your private group. Well, mate, I don't know what your name is, but you will have to request details. It's scrolling below the screen. You'll have to send an email and then you'll get the details. It's not something I share publicly. It's the reason it's called a private group. Right. So for instance, BTC, let's see what was being discussed on this chart in the last webinar. Actually, we did not have a very clear setup of any sort. We had a scalp long opportunity. I'm pretty sure we were looking for longs above 66,000 something. This line basically, and it did that, but it was not a very high probability trade. And as you can see, it did not really perform much either, which is something I did make very clear in our webinar itself. So BTC, from a higher time frame perspective, I'd like to have a very quick look on what was being said and what's happening. So here is the chart. Let's check on the daily. So it is stuck in a higher time frame sideways range of wave 4. If the wave 4 is complete here, we will need a confirmation that the fifth is in play once the market takes out the high of 72,147, or let's say 70,150. Right? If the market does not take that high out, then it can just continue propagating within this box range. Right? And that is what's happening for a very, very, very long time. And that's why I have not really recommended anything specifically, because this wave for so far looks like a complex correction. And although it does give us some good trading opportunities, it requires more time, and generally the opportunities are having higher risk and lesser reward. So we did have a minor long play here, which did not really perform that well. And I did mention it very clearly, it wasn't supposed to. Now again, we are seeing another long play. If the market takes out this high again, 64,913, whatever this level is, just check it on your chart. Keep in mind, we are using this data feed, so yours will have a different price. So whatever the case is, if this level is taken out, then we can see another possible long play, scalp perspective only, not swing, right? It can then lead to a follow up as a swing move up, right? But that is something that remains to be seen, right? So that's about it. I just wanted to give you a rough outlook on the higher time frame perspective, because we are not seeing very clear short term trades here. And with that being said, I would say we have discussed just about everything we discuss in these public webinars. And if you enjoyed the content, you should have already hit the like button. If not, kindly do so now and do your part and spread the word by sharing this content with your friends, colleague in Slack, Discord, or whatever communication means you are using to remain in touch with your trading friends. That's about it, guys. Thank you for staying till the end, those who did. And I will see you guys in the next webinar. You're very welcome, mate. Hey, Luis, thanks again. Well, nice to hear. Good words. Okay, guys. So I'll close the webinar now. Take care and see you in the next one.